Hello everyone, in this video I'm gonna talk about the potential delisting of NIO company. But before we get started, please leave a comment and subscribe to the channel and give me a thumbs up as I really would appreciate it. And without further ado, let's get started. Electrical vehicles have captured the imagination of people around the world. Investors want their piece of the fast-growing EV industry, and Chinese NIO, ticker symbol NIO, has been a popular pick among those interested in its electrical vehicles SUVs. NIO's stock has responded favorably to company's fundamental growth in SUV deliveries recently, posting a huge gains as investors flowed into the space. However, a new threat has emerged that could potentially jeopardize shareholders' ability to buy and sell NIO stock on New York Stock Exchange. So let's talk about the recent legislation that could lead to NIO stock getting delisted from the New York Stock Exchange and create a big hassles for those who want to participate in the Chinese company's future growth. In a rare show of bipartisan support, the House of Representatives voted unanimously to pass the Holding Foreign Companies Accountable Act HFCAA on December 2nd. With the move, the House joined the Senate, which had similarly passed the bill unanimously back in May. On its face, the provisions of law look dire for the hundreds of Chinese companies whose shares are currently listed on various U.S. stock exchanges. The law requires additional disclosure from Chinese companies with the intent of ensuring that those companies are complying with U.S. accounting rules in overseeing their operations. The most common situation that the law seeks to remedy is when Chinese company uses a public accounting firm that is located outside the U.S. and is not available for inspection or investigation by the U.S. Public Company Accountable Oversight Board. In that case, the Chinese company will have to demonstrate that it is not owned or controlled by a government entity with China. The problem is that Chinese law generally prohibits local public accounting firms providing corporate audits from disclosing accounting-related documents to foreign regulators. For a company like NIO, simply to comply with the law, therefore, it's not as easy as one might think. Here we come to the question, and the most important question: should you buy NIO stock or not? Having shares delisted from New York Stock Exchange would be a serious blow for NIO's shareholders. Many U.S. investors would be in a position in which they would have to decide whether to sell before the delisting took effect or hold on their stock. They would still have an ownership interest in NIO, but they would not easily be able to sell their shares or buy more stock without a U.S. listing. So the process of buying and selling the shares is going to be more difficult for the investors, especially for the U.S. investors. However, it is highly likely that even with the law on the books, it will take a long time before NIO or other company would get delisted. So they will take a long time for these regulations. Government agencies will likely have to develop regulations on how to implement the law, which is an extremely lengthy process. Even once regulators have those rules on the book and can establish non-compliance, a range of appeals and other recourse would likely be available to NIO to delay any further actions. Most importantly, NIO itself has given some positive comments about the law. Reports from multiple sources suggest that NIO believes that it is already in a compliance with the HFCAA's provisions. That's it for this video. I hope you enjoy. If you did, please leave a comment and subscribe to the channel, and see you next, guys.